Dollar in decline. China's bold move with the yuan sends shockwaves through the global economy. On April 8, 2025, the Chinese government quietly but decisively took a step that could reshape the global financial order by easing currency controls. On the yuan, Beijing sent a clear message. The era of unquestioned dollar dominance may be coming to an end. This move wasn't made in isolation. It followed closely on the heels of former President Trump's announcement of new tariffs targeting Chinese goods. In what appears to be an immediate and calculated response, China opened a new front in the global economic war. This wasn't just policy, it was strategy, and perhaps it was a declaration of intent. The financial world, especially Wall Street, didn't take long to react. Markets trembled. Analysts scrambled to understand the implications. Was this merely a technical shift in China's currency policy, or was it an all-out challenge to the supremacy of the US dollar? For decades, the US dollar has served as the backbone of international trade. From oil to electronics, from arms deals to food imports, the dollar was the currency of trust. But now, that trust is eroding. Saudi Arabia, long seen as a loyal partner in the petrodollar system, has begun selling oil in yuan. Brazil, once heavily dependent on dollar-cleared trade, now sells soybeans outside the dollar system. The IMF reports that the yuan's share in global currency reserves has doubled over the past 2 years. Meanwhile, a JP Morgan report reveals that foreign investors are fleeing US Treasury bonds at a rate not seen since the 2008 financial crisis. The reasons are clear. America's national debt has ballooned to historic highs, and interest payments now exceed even its defense budget. Inflation remains stubborn, and political divisions have paralyzed policymaking. The economic credibility of the US, once unshakable, is now in question. China, on the other hand, has been playing a quiet but masterful game. Its domestic market is booming. The Shanghai Stock Exchange recently overtook the Nasdaq in trading volume. Beijing has invested billions into infrastructure, technology, and green energy. And while the West debated and delayed, China built economic partnerships across Asia, Africa, and Latin America. Even traditional allies of the West are pivoting. Germany has signed a $12 billion trade agreement with China, bypassing the dollar entirely. India has started paying Russia in yuan for oil and arms. After being pushed out of the SWIFT banking system, Russia quickly adapted to using China's digital yuan, a currency now accepted in multiple cross-border payment agreements. Is this merely a shift in trade logistics, or is it the beginning of a new world order? The dollar's power has always rested not just on America's economic strength, but on global belief in that strength. With each passing year, that belief is weakening. The US now faces a painful choice: enforce harsh fiscal and monetary policies to defend the dollar, or continue printing money and risk runaway inflation. Either path carries deep consequences. What we're witnessing isn't just financial maneuvering, it's a geopolitical earthquake. In the coming years, gold, blockchain-based currencies, or the yuan, could become the new anchors of global trade. Central banks around the world are stockpiling gold, experimenting with digital currencies, and reducing their exposure to the dollar. China may not have fired a missile, but it has launched an economic offensive that's reshaping alliances, reconfiguring trade, and rewriting the rules of power. And so we are left with a haunting question, not whether the dollar will fall, but how soon the world will allow it to. As the old systems fracture and the new ones rise, the world is being redrawn, not with bombs or borders, but with banknotes and bytes.